All right, good morning from the digital trenches. It's January 3rd, 2026, and if you were hoping for a quiet start to the new year, well, think again. The market just threw a massive geopolitical curveball, a real shockwave coming straight out of the Caribbean. We are literally watching global conflict devour our charts in real time. So can a real-world military raid actually crash the price of digital money? I mean, that's the billion-dollar question right now, isn't it? Because what we just saw over the last 18 hours, man, it wasn't just another headline. This was a brutal, real-world stress test for the entire crypto thesis. And look, to really get why this hit so hard, you've got to remember, we're basically living in two completely different financial universes that just smashed into each other. You've got traditional finance, TradFi. It clocks out at 4 p.m., it takes weekends off, it goes on holiday. But crypto, digital assets, this world never, ever sleeps. It's 24/7, 365. And that nonstop nature makes it the first responder and the first victim when something big breaks while Wall Street is totally dark. Okay, so here's the game plan for today's explainer. We're going to start with the shockwave itself. Then we'll look at how the market's totally divided right now. After that, we'll dive into the fear index to see how everyone's feeling, map out where we could go from here, and wrap up with the big political wildcard that could change everything. Right, so when worlds collide, this whole 24/7 thing with crypto, it's a double-edged sword, right? It's a feature and a bug all at once. Opportunity is always knocking, but so is risk. So when huge news like this breaks over a weekend, there are no circuit breakers, no timeouts. It's just raw, unfiltered price action, driven by pure emotion and gut reactions to headlines. Okay, let's talk about that shockwave, the Venezuela shockwave. The thing that kicked off all this chaos didn't come from a trading desk. It came from Caracas. All of a sudden, reports are flooding in about a U.S. military raid in Venezuela, apparently targeting the country's leadership. And the timing? Oh, it could not have been worse for the markets. Just look at this timeline. Think about it. Less than a day ago, just 18 hours ago, Bitcoin was flying. It was on this beautiful, optimistic rally, about to smash their $91,000 and set a new high for the year. Everything was looking so good. And then, bam, the news hits. The raid. And just like that, all that momentum, it just hit a brick wall. Dead stop. And this wasn't some quiet rumor on crypto Twitter, okay? This was front page news, headlines everywhere, like this one from Cointelegraph. Bitcoin price 90K breakout hangs in balance as US storms Venezuela. I mean, that headline just captures the moment perfectly, right? A beautiful technical price breakout completely hijacked by boots on the ground in the real world. And the chart? Well, the chart tells the whole story. You can see it right here. Bitcoin's on a steady climb, looking strong, and then wham! The news breaks and the price just gets slammed. It's like it ran into a wall. And now it's in this desperate fight to hold on to that crucial $90,000 level, just hanging on by a thread. But this is where things get really interesting, because the market didn't just have one single reaction. It wasn't just sell everything. No, it was a market completely divided against itself. It basically broke into pieces, with different assets telling totally different stories. You had this wild three-way battle between raw fear, deep long-term conviction, and just pure unadulterated speculation. Just take a look at this breakdown. It's nuts. In one corner, you've got the big guys, Bitcoin and Ether. They took the punch right on the chin, right? Staggering, trying to find their footing. But then, in the other corner, you have the degen casino. It's party time. Meme coins like DOGE and PEPE are just exploding, some of them jumping 25%. And then you have the wild card, XRP, which is on a tear. It just reclaimed the number 3 spot, blew past $2, all because of completely separate news about an SEC commissioner leaving. Total chaos. And this right here, this is maybe the most important chart of all, especially for Ethereum. It really shows that split personality of the market. While the price on your screen was looking shaky, panicky, look at this. The line to get into the network, the validator queue, just swelled to almost 1 million Ether. We're talking billions of dollars of capital, basically saying, we don't care about this short-term noise. We are betting on the long-term health of this thing. It's a massive sign of conviction. So you've got this tug of war, right? Fear on one side, conviction on the other. How in the world do you measure which one is winning? Well, it's time to check the pulse to the market. Let's look at the fear index. This is, of course, the Crypto Fear and Greed Index. It's a pretty cool tool. It crunches all this data, volatility, momentum, what people are screaming about on social media, and spits out a single number from 0 to 100. But here's the secret sauce, right? For a lot of the pros, when this thing flashes extreme fear, it's not a run for the hills sign, it's a get your shopping list ready sign. It can be a massive buying opportunity. So where are we right now? 29. That's the number. We are officially in the fear zone. After weeks of everyone being pretty greedy and optimistic, this geopolitical shock has completely rattled the cage and sent sentiment plunging. So why 29? What's driving all this fear? Well, it's a couple of big things. First, obviously the crazy spike in volatility thanks to the news. And second, look at where the money is. It's still huddled up in Bitcoin. BTC dominance is sitting around 60%. That tells you that even with that little meme coin party happening on the side, the big, serious money is not ready to take on more risk and kick off a real alt season. All right, on to our next section, pathways from here. So we've got the lay of the land, right? The market is scared, it's divided, and it's basically teetering on a knife's edge. So the big question is, where do we go now? Let's look at the possibilities. Okay, for the next 48 hours, it really feels like it comes down to two clear scenarios for Bitcoin. Path number one, the bulls take back control. Bitcoin reclaims that momentum and gets a solid, decisive close above 92K. If that happens, watch out. You're going to see a huge wave of FOMO and all the shorts are going to get wrecked. Path number two, the bears win. It fails to break out, fear takes over, and we see a retreat back down to the next big support level, somewhere around 87K. Now let's zoom out a bit. What if this whole Venezuela situation gets worse? Like, it turns into a real, drawn-out conflict. Where does the money flow then? Well, you can bet the party and high-risk stuff like meme coins would be over real fast. People would cash in their profits and run. And where would they run to? Probably to the safe havens of the crypto world. Think about things like the plumbing behind stablecoins, or even tokenized real-world assets, RWAs, things that are tied to something tangible. But even with all this short-term chaos, there is a giant elephant in the room, a huge macro signal that we can't ignore. And it's coming from the Fed. They've been dropping these little hints that the whole financial system is running low on cash, and they might have to fire up the money printer again sometime this year. And as we all know, historically, nothing is more like rocket fuel for Bitcoin than the money printer going brrr. Okay, last section, and this is the big one, the political wildcard. So we've got this perfect setup, right? Short-term fear battling long-term hope. The market is perfectly balanced on a razor's edge. What's the one thing that can knock it off? Well, it turns out the next big market-moving event isn't coming from the blockchain. It's coming from a press conference in Florida. And that really gets to the core of it, doesn't it? The big takeaway from this whole mess is that right now, political news is financial news. The single most important piece of data for every trader out there isn't going to come from an order book or a chart. It's going to come from a politician at a podium. Which is why everyone, and I mean everyone, is now just watching the clock. We're all waiting for Donald Trump's press conference at Mar-a-Lago. He is expected to talk about the Venezuela situation, and whatever he says, man, it could either be a fire hose that calms things down, or it could be a can of gasoline on an open flame. This single event is going to set the tone for the next big move. And all of this leaves us with one last really big question to chew on. This whole space was supposed to be outside the control of governments and politicians, right? So what does it mean when a single press conference suddenly matters more than months of on-chain data? When politics is driving the price? Who's really in control here? I'll just leave you with this one thought, a famous quote that gets thrown around in times like these. The wise one is the one who knows to buy when blood is flowing, even if it is their own blood. It's a pretty stark reminder that in these moments of maximum fear and chaos, that's often where the biggest opportunities are hiding. Stay sharp out there.